Hello, everyone. My name is Steph Wise. I am coming to you today with some information on a tax strategy for those that have home-based businesses and also for our partners that are involved in terms of preparing for our taxes. What do you need to know? What do you need to have? And what is the strategy that we can use for ourselves and that we can use to share with other people? So thank you so much for your time and attention and being here today. The first thing I want to talk about is the idea of an RRSP. So most people in Canada, this is the term, it's like a registered retirement savings plan where you put money aside and it gives you a tax break on your taxable income, right? So if you have an income of $50,000, and I'm going to show you the different income brackets where depending on how much you earn, you pay a higher tax rate. And in Canada, we have one of the highest tax brackets in the world. So we pay the most tax out of many other countries around the world. And so when we're looking at this, we're actually looking at the big picture idea is what are some different ways that you can actually reduce your taxable income. So in effect, save more money on taxes, and which puts more money in your pocket, essentially. So when we look at the RSP, this is a strategy that gives you a tax break. And I wanted to start off with this and then go to a comparison of what it looks like when we're deducting our own expenses with a home-based business and compare it to that of an RRSP. So the RRSP, this is based on, let's say, the example is $50,000 income, okay, salaried income, plus maybe you're taxed roughly about 30%. So you're paying $15,000 in taxes. So when you look at that, you make $50,000 and you're paying $15,000 in taxes. That's a lot of money, right? When you look at an RSP, what it does is it reduces your taxable income. So if you have $10,000 in an RSP, then your new taxable income is $40,000 instead of $50,000, right? So if you're reducing the amount of taxable income, then in effect you're paying less tax. So the savings here is 30% because that's how much the tax bracket is on $10,000 RSP is a tax savings of $3,000. Now with an RSP, not everybody has $10,000 extra to just put away and have it just as it is, right? And so that's where it's not necessarily going to do a lot for people that can't contribute a sizable amount of income. Okay, so I want you to just remember this slide in terms of RSP. It is a strategy to reduce your income, but really to make a big impact, like I said, you need to have a good chunk of money to be able to put into an RRSP or to invest, in a security at the bank of that nature, right? So that's where this comparison, would really warrant a advantage of about $3,000. What I want to talk about today is an analysis of the advantages of having a home-based business. And a question I always like to ask, like many people that are here on this call or maybe watch the replay, you have a job, right? If you have a job, you're paying tax, and you should be, because if you're not paying tax, then you're not doing things legally, right? We're required to pay tax in Canada. By having a home-based business, it actually gives you an advantage to save money on the things that we spend money on every day. So before I get there, this is pulled from, you can see the link where it's referenced from the CRA site, the Canada Revenue Agency, where it shows the different tax brackets. So the more money you make, the higher you're taxed, right? And so let's say 26%, 26% up to, you can see the bracket there. So when you're making, in between different thresholds, that's where it's really important to look at ways that we can reduce our taxable income, right? So those are the federal tax rates. The example I gave you on the RSP sheet was 30%, just kind of taking a number, just a general percentage, right, as an example. But you'll see why in a little bit. If you're earning 50,000, or if you're earning 70,000, or you're earning 90,000 in your salaried job, whatever it is, and you don't have an RSP or a home-based business to reduce some of those expenses, you're just spending a lot of extra money on tax that could really be avoided. Okay. So what can we deduct? So what are some of the things that, now I know many people listening to this call today are partners already with our company, with our home-based business opportunity. And I'm going to just reference an Excel sheet. Ifra, just let me know that this is what you can see on the screen.
Yes, my dear.
Okay. So this just gives an example of different expenses that we endure in our lives in general, right? So the categories of expenses where we spend money, we have a cell phone, we have internet, there's car expenses, transit, meals and entertainment, everybody eats, office expenses, accounting, all these different travel, promotion, all these different categories. How many of these categories would you spend money on regardless of having a home-based business? Probably all of them, right? But here's the cool thing. With a home-based business that you're building out of your home, a portion of all of these expenses that you're spending money on anyways become a tax deduction against your income. And so in effect, you're essentially paying less tax at the end of the day, or even better, getting a refund. So I always say, and I'm going to dig into this a little bit more, I always say, if you have a job, if you have a salary position, you're paying tax, you're getting your CPP deducted or whatever, your pension fund or EI, all those things that come off, you're having a job and being employed, and you do not have a home-based business, you're literally leaving money on the table. And my goal is, by the end of this, is to show you how and why that is. And then I'm going to take us through some tips and some strategies for our partners and for people that do have a home-based business to be able to keep themselves organized and prepare for the tax season, because it's a little bit different than filing your taxes just being employed. There's other things to sort of keep in mind. So if we look at, here's an example, and I don't know if, $150 monthly expenses is realistic. Maybe I can just retabulate this. I'm going to put 70 and 70 for cell phone and internet. I can give you all access to this sheet as well, so you can do this own worksheet. This is a really great worksheet for us to do for ourselves, for our own budget and expenses, and also for potential people who want to take advantage of this strategy. Okay, so I'm not going to change any numbers here. This is just an example in the car, and again, it's just an example. With your car expenses, it's a little bit, again, you have to remember that you can only deduct expenses for the portion of those expenses that you use for your business, right? Not 100% of your car if you're only using it 20% of the time for your business. But then the home expenses is interesting too. And down in these categories, transit, meals and entertainment. So CRA will actually allow you 50%, up to 50% for meals and entertainment. And especially, so any opportunity where you're going out to eat or you're going to do something and you're talking about your business, that becomes a claimable receipt, but only up to 50%. So of all the receipts you have, you take the total and you divide it by 2. And then this is calculating it in an annual expense, right? Office expenses, if you purchase a laptop, if you purchase a printer, if you invest in a desk or whatever you need for your home office, majority of that can be tax deducted because you're creating a home office to run your home-based business. And make sure that you're keeping everything, all the receipts, right? Because if you don't have a receipt, you don't have documentation to actually claim it. So that's the important thing. Accounting fee, travel, well, we're not doing a whole lot of traveling right now, but if you're going to conventions, or even if you have expansion in your mindset of expanding your business globally, and you take a trip and you're doing meetings, and you're even if you go on vacation and you are talking about your business, or you're having business conversations, you're generating customers while you're there, that travel expense also becomes a tax deduction. Promotion. one of the things that I love about our business is, with our products, especially the fashion, their visual products, what do we do? Like, what do people like to receive as gifts? And this is just an example, giving gifts away. So as partners with our home-based business, we give gifts that are products in our business. So the people that we're actually gifting stuff to, and think of all the gift giving occasions there are in a year, right? Think of these as opportunities for promotion. If you have people that are wearing your products, and I'm talking just about fashion for a second, you're talking about people that, or you're gifting our products to people and they're wearing our products, right? They're promoting your business because it's visual marketing, they're visual products. So don't discount the fact that just by gifting, any products that you're purchasing and giving away as gifts can also be deducted in your business expenses. Rent and home. So there's different rules around, renting a home versus owning a home. I don't think you can claim your whole mortgage, but you can claim your mortgage interest and your property taxes as part of your business expenses. And then business, this could be, where your monthly shopping credit amount, like the products that you're ordering, and even the investment of originally starting a business. So the lifestyle advisor package is $1,500 plus tax, $1,695, and then I think I'm just going to put $1,700. It's just easier math. So for someone to launch as a lifestyle advisor, $1,700 they're investing to start their business. That's 100% tax deductible because they're starting their business, right? And I'm going to show you my tracking sheet later where I keep track of like all the different events that I go to, the different promo tools that I order, anything related to my business, obviously is a tax deduction. But also the rent and home is interesting. And for the purpose of this, it's not even factored, okay? But I deduct my rent. I don't own a home. I deduct my rent, my utilities, the hydro, the gas, the internet, like everything to do with my home, but a portion of it that I use of my home that I use for my business. So in this example, it's 20%. I usually use 15%, and we'll talk about that a little bit later. But what I want you to see here is like many of these expenses, car expenses, your living expenses, you go to eat out anyways, you like to travel, to do all these things, your cell phone, your internet, many of these things we're going to spend money on anyways, right? And so what I want you to see is the potential in having the ability to deduct expenses on things that you are going to spend money on anyways against your income and therefore paying less tax. So I hope that is clear. So this just gives an example, and then it goes to the bottom. So, and you can plug and play and put your own numbers in here. Approximate tax brackets, I could probably check they're probably in the range anyways. And again, this is just to give you an example. So total yearly business expenses, 25,000 on average, or in this example, at a 30% tax bracket, that's a savings of $7,700 against your taxable income. So that is powerful. Is that a little bit more than the $3,000 with the RSP we saw in the previous slide? Right? And this ranges, of course, because everyone's situations are different. But I can confidently say, in the time that I've been with their company, I've been able to claim between, $5,000 and $8,000, getting between $5,000 and $8,000, back or reduced, in terms of my tax return. So it's very, very powerful. And this is an important strategy, again, just conceptually for you to pay attention to the advantage of having a home-based business versus not. So what would you rather do, right? Keep working a job without having a side business and paying the same amount of tax? Or would you, prefer to start a business for $1,700? With our lifestyle advisor package, we actually get back, $2,500 value for $1,500 plus tax, right? You get to start a business, you get to earn income. And the worst case scenario, you can still, even if someone, didn't have a lot of success, or they made a little bit of money and they tried really hard, worst case scenario, they tried, it didn't work for them, they made a little bit of money and they can show that they put effort into their business, you're still going to receive the tax savings. You do not need to be a multi-$1,000 income earner, or $1 million income. Like, you don't have to be turning a profit in order to have these deductions. You do need to show that you have put effort, right? And this is where I'm going to talk later about your receipts and keeping track of things properly, so that you can show proof that you were building your business in order to have these deductions. So I hope that that's clear. So now we know a strategy how to save money on taxes. For anyone that is seeing this video that has not made a decision to start a home-based business, I hope that this would be some encouragement to look at something that could be a good fit for you. And for everyone listening today that is already a partner with us, now that you know this strategy, can you think of some friends and family who could benefit from this information, right? Can you think of anybody who might want to know how this works? Even from just a mindset of savings and why pay tax if you don't have to. The other part to this is, what are a lot of people thinking of and planning for is retirement, right? The problem with retirement planning, especially in Canada, there's no pension funds really. Like, it's not living the dream of being able to retire and receive a pension like it once was before. Then there's a lot of reasons for that, and I'm not going to get into that. But, most people are not going to be able to retire with a pension that is going to allow them affordability to live with the standards they want to live. Could you see this as being an advantage, a tax saving strategy? This is just 1 year. What if you put, you had a tax savings of $5,000-$6,000 and you put half of that away for retirement, right? This could be a long-term retirement planning strategy as well, if you're thinking beyond just building a business and earning income. Okay. So I hope that that's clear. If there are any questions, I will answer questions at the end. But this allows, the average Canadian to save between, $4,000 and $8,000 a year to put away for their retirement, which I think, in the reality in our economy and the way things are today, we cannot rely on the government to pay us pensions and for us to be able to live and afford to live. This is why we see the average age of, a retiree extended. This is why you see 70-year-old seniors, having greeting jobs at Walmart, right? Because they can't afford not to work. So what are you doing now to prepare for that? And this is a strategy. Again, if you know what you know, and you can work towards it and take advantage of this strategy. And I've said it before already, but if you have a a salaried job, if you have a full-time job and you do not have a home-based business, you are literally leaving money on the table. And I hope that you can understand that now by seeing this illustration. So I'm just going to flip back to my slide. So I showed you that spreadsheet. I also have some other references of, and these are all here, so you can have access to these as well. The reference to the CRA guidelines of what you can deduct and what you can't, right? So we have to follow the rules, and you have to do your due diligence on being smart about what you are claiming. So, you don't want to deduct, you can't deduct, buy a new TV for your house and have it in your living room and write it off 100%. Like, how can you justify that you are using that TV for your business, right? And even your computer, you're not using your laptop computer 100% for business. You're probably using it for other things too. So being realistic about what type of deductions, number one, what are you deducting and how much you are deducting it as far as a business expense. So that's what I wanted to share in terms of the strategy. Let me stop sharing my screen for a second. And actually, I'm just going to take a pause. Does someone have any questions about what I just talked about and the strategy right there. And then I'll get into some tips. I'll keep going then. All right. So we saw that example, and now I'm going to go to share my screen again. Sorry, I'm just jumping around screens. So some tips. So we know the strategy. So now we can be empowered to share the strategy with other people to let them know what is available to them. I want to talk about preparing for tax season because this is the time of year where we're in. Many of you, who are already partners, you would have received an email from our corporate office, from our office manager, asking for a response to confirm your information and your SIN number so that they can mail the T4A statement out, which is a statement of earnings. So from our corporate office, they will send you an official document that shows your income as far as the back office goes, commissions, retail profits, etc. And that's what you're going to use to substantiate, your income. The other thing though with income and is we often do like cash and carry sales. So you buy personal stock and you sell it and someone gives you cash, right? Technically, you need to be recording that income. And if you're not doing it now, please start, because that is part of being a professional in business, is keeping track of these things. And I'm guilty of it too. And sometimes I just have to catch up or, remember and write it down, right? And so when you're preparing, really this process begins from when you launch as a new partner. I always say keep everything. Every piece of paper you have, keep it. And maybe not everyone would agree with me, but keep everything, especially if you're new at this and you've never been in business before. Keep it all, because you can always throw something out. What you can't do is you can't just estimate a number of something where you don't have a receipt that exists, okay? So keep everything. You can always throw something out. I already said this before. Be reasonable with what you're claiming. So the TV example. And I'm going to show my tracking sheet where I record, my receipts and expenses. Organization. So give yourself some time, maybe once a month, to just go through everything that you have. So what I typically do is I just have everything in I could do a better job organizing, but I keep it all in one place. And then once a month, I take some time and I go through it and I sort things out by category and I, make sure I'm organized that way. Or I hire a student and I get the student to help me do with paperwork and receipt organizing. But you want to make sure you have a system for yourself. So first of all, keeping everything, and then you need to have somewhere to store it, right? So put it somewhere, put it in a box, or even better, you can sort it in, as you're sorting receipts. I use this for organizing them. So I sort them by category. So I have food and supplies, I have marketing materials, I have administrative, I have gifts and travel and personal. So I sort by category, okay? And then that way it makes the job a lot easier to do when I'm compiling all my expenses, getting ready for tax time. The other thing I will say is hire the right help. So if you don't have time to do bookkeeping and to do this organization, actually, it's funny. I pay my son to help me now because my time is worth a lot more than sitting and organizing receipts and typing them into an Excel sheet. There's also lots of tools, like there's apps where you can scan your receipts. I'm not going to get into that today. I'm kind of old school. I just keep my receipts. I organize them by category. And then every so often I enter the data. And so at tax time, I've got my Excel sheet that has all my expenses and I give that to my accountant. So you're going to spend a lot of money if you don't have it organized. And you're hiring your accountant to do it, because accountants typically will charge, a lot of money. Like they're higher level. I use an accountant to file my tax return because they know the nuances of tax law, what I can claim, what I can't claim. And even though I'm capable, I'm a business degree, I'm capable of filing my own taxes. I understand it. I still pay for an accountant to do it to make sure it's done properly and that I haven't forgotten anything or I haven't acknowledged any changes to the laws. And plus, again, the accountant's fee is 100% tax deductible. So it's a good investment to have. Again, for bookkeeping and how you keep yourself organized, that's up to you. Maybe you want to hire a bookkeeping company to do it. Maybe you hire, your kid like I do to help me get organized. That is totally up to you. So what I'm going to show you now, so that's the end of my slides. But what I want to show you now is just an example from a previous year. And these are my numbers. I mean, I'm happy to show them. Like, there's nothing to hide there, really. It's just, this is, and I'll make sure that this is included in our team files. So if you want to use this example. So what I did, remember I was talking about the different categories, and same with on that worksheet that I showed you before, everything was broken down into categories. Well, because really it's easy to just collect your bills, organize your bills by category. And the other reason for that is some things you may not be deducting as a higher percentage. So here's an example. So fit meals, you can only claim up to 50% of your meals, your receipts from eating out, right? So that's a different percentage of business use than cell phone, than internet, right? So that's why I group like things together. And then in my spreadsheet, it does the math for me. Okay. So if you look here, cell phone, here's the cell phone first category. I have a tab at the bottom where I've put all of my cell phone bills there, and it pulls the total over from that sheet. So that's the total it pulls, comes from the other sheet. It calculates the tax and the business expense. So this is actually the number that I'm using to claim for my tax expenses. So this is my total claimed expenses that I use to deduct against my income on my 2018 return. Same thing, internet, office, education, and your sheet might look a little bit different. So I have education. So anything I invest in myself, any education, any courses I've bought, I write off on my taxes because I'm furthering my personal education to grow my business. You see? And that is easily a justifiable expense because I can justify that there is value in me spending this so that I can grow as a human being and help more people in my business and grow my business. So so again, there's one other example there. Home expenses. So this is where, if you notice, the percentage is 15%. So with CRA, how they actually want you to calculate it is like, what percentage of square footage of your home do you use just for your business? Okay. So if you added up all the square footage of your home and what percentage do you use just for your business, that's the percentage that you should use. So my office is pretty small. And I also, well, not in COVID times because we're not really hosting people, right? So my business use will probably go down a little bit for my home. But I used to have parties or I'd have people over to do tours, presentations. So I could justify a portion of my living room for my home-based business. So it's based on what percentage of your home do you use to operate your business. And I break down all my bills, right? My rent, everything is here. Okay. It calculates the total and then it calculates 15%. Travel accommodations. So I took a few trips, same thing. So this is the sheet that I use. Again, you may decide to have someone else do this for you. I get my son to do the organizing. So he sorts and categorizes, and then I go through it and I throw out the ones I don't need because I know which ones I, have used for my business or not. The other thing I should mention is if you have a food receipt, let's say, either in a different place. Anyway, what you should do, oh no, they're not, they're right here. I just didn't write on it. What you should do is you should actually, if ever you got audited by CRA, they actually want to see the proof. They want to see the legitimate proof, and they'll go through everything. So if you're claiming things that you don't have a receipt for, then you could end up owing money back, right? If you're claiming for something that you don't have a receipt for. And I know used to work for CRA here. I've even been told that a credit card statement is not sufficient enough. Why? Because it doesn't have the itemized version. It doesn't say what it was. Sorry, this one does, because it's an actual receipt. But on your credit card statement, it doesn't show the breakdown of what specifically it was, or the tax that you paid. And so I've heard before that if you don't have the physical receipt, then you shouldn't claim it at all. Because at the end of the day, if CRA decided to audit you, and they're going to go based on the receipts that you have in hand. The other thing too with this is, like, especially for eating out, you can actually write on it who did you eat with, what did you talk about, right? So if ever you got audited, you have proof. This was this so-and-so's meeting, so-and-so's lunch, this is what we talked about. That is documentation that you've used it for your business, not just throwing in receipts and trying to claim what you can claim. So you have to be careful. So you want to make sure you are reasonable with what you are expending. Otherwise, there's a chance you could get audited if you're just throwing in expenses just to have more deductions, and your numbers are not within reason. Then you could get red flagged to get audited, and we don't want that to happen. So that's why I'm teaching you everything to be on the conservative side and to be as careful as you can be in terms of having documentation. Now I know, people take Ubers. I know another way to keep good track is, like, if you have appointments in your calendar, right? If you don't have a receipt, maybe, or, like, again, if they want to see that you've been actively building your business, make sure you have appointments in your calendar. So if ever anyone questioned you, you could go back and you show them where you had these discussions, where you actually were building your business, to show that you were actively building a business, if that makes sense. So I think that covers. I'm trying to think if there's anything else. The other good strategy is buying gift cards. So if you buy a gift card, people can use gift cards for whatever they like, right? So, and maybe often people buy client gift cards. They buy client gift cards. They give stuff away in that way. So that's another way. Like, at any establishment, you can buy a gift card, like at Tim Hortons. Actually, I buy $5 gift cards at Tim Hortons regularly, because I give them away. I do this thing called Wealth Wednesday where I give them away. But anyways, you can also buy gift cards, and that would be included. That is a deductible expense that you can use. Again, if you're using it and you're giving them away for the right reasons. So if you just wanted to think about that as well. So I'm just going to stop sharing my screen, and I'm just going to review my notes. I think that was basically all I wanted to cover. So what you want to do for your taxes, you don't want to bring your accountant a box of stuff. Like, I've given you some tools to take some steps to keep yourselves organized. If you're not keeping receipts, I hope you keep them now. And just know that you may not need all of them, but at least you have them. And the other thing that will be helpful to do is to keep track of your sales, your cash sales, because those sales are not tracked in the back office. So our back office commissions will show you how much you made retail profits and team commissions, and everything that is calculated in the back office. And there are reports in our back office to be able to find that data and to use it for your taxes. What I'm focusing a lot of attention on are the things that are not tracked by the company, right? So, there's a tool that you can use to keep yourself organized. If you want to delegate that, even better. And I hope that this was helpful so that you can take steps to be organized. And I think it's important that we talk about this early on when we have new partners coming on board too, so that they know, and so that there's no surprise, when it comes time to do your taxes and you have no receipts, then what do? You can only claim what you have a receipt for. Okay. So that's what I wanted to cover today. Feel free to come on and unmute yourself. If you have any questions, if anyone has any questions, I'm here for you. Everyone's speechless. All right, well, I'm going to stop sharing. I'm going to stop recording, because that's the content of the presentation today, and then we can freely ask questions as a group.